It's Friday, ending the second week of December. The markets ended up flat for the week. However, there was a thrust up before the Fed meeting. After the Fed meeting, the market sold off, and the week ended actually down, slightly down. This week actually changed our perspective a bit. We are no longer as bullish as we were. Main concerns that we have is the weekly candle. It looks rather bearish. What we're thinking could possibly happen is a retest of this trend line, possibly a test of this trend line. Looking at the weekly chart, besides this week's candle, there isn't much else that worries us. Realistically, we're still bullish longer term because we can see a lot of buy volume over here, but this channel breaking is a real concern. You can see that there was an increased volume the day before Fed and the day of the Fed meeting. Both of those appear to be sell volumes. If you look at the 1 hour chart, this is probably sell volume. This might be this is sell volume, might be buy volume too. But the real concern is this candle right after the Fed meeting and this candle ending the day of the Fed meeting. Both of them are relatively high volume. Seems like it was sell volume, so there hasn't exactly been too much buy volume either. This might have been buy volume, but also could have been sell volume. As well as another main concern is that, as you can see, the POC, the point of control right here, is right here on the 1 hour chart, coincides with the point of control on the daily chart, but there was not as much bullish activity around those levels, and there should have been, but there wasn't, and well, that's not good. That's not good for the bulls at all. Also, you always want to go back to longer term charts, and it's just the monthly chart, the rally that we're in right now, it seems to be stumbling, weakening. So the retest of the channel right here on the weekly just seems a lot more probable now the way this week closed. Let's take a look at actual index at the SPX instead of the SPY. No volume, but price action is a bit different, and that can give us hints. Well, the weekly chart looks basically the same. However, the daily chart looks a lot more bearish. As you can see, SPX now broke this resistance. It had an up thrust and then a confirmation down candle, which doesn't really look good. SPY, on the other hand, broke this resistance, closed above it, but then it didn't hold the support. So all in all, lots of bearish signs, not too much bullishness going on here, not as much as we hoped for or expected. For next week, we'll probably have to go with the down verdict, but once again, you never know. What really changed our minds, it wasn't even this bearish daily candle on the SPX or the bearish weekly candle, just the fact that there was no strong rebound at the point of control, and the point of control coincides on the daily and the hourly, and there was nothing, nada. Next week, this channel is probably gonna break. As for targets, a good possible target is the lower range of the value area on the hourly, which is 140.50 on the SPY. 140.50 seems like a good place to put a low, to take a breather for the markets. There's lots of support here. Next week, the verdict is down.